Good afternoon and welcome to everyone on this cold but sunny January day. This is the Key Issues Impacting High Net Worth Divorce webinar that we have run at Quantuma. If anyone thinks they've joined anything else, this is the time to leave the call. I'm very pleased that we're covering quite a wide range of areas today. You should be able to see who our panelists are. So first of all, we are going to have Chris speak about investigations techniques. Chris is joined by my colleague Gina, as Chris is actually losing his voice today. We're then going to hear from Rob Moore, who's a consultant with us specifically about crypto and techniques for investigating crypto assets. Then a slight change in topic, and Daniel Sladen from our sister tax firm is going to be speaking to us about changes to capital gains tax. And then finally, my colleague Kate Hart is going to be joining us, and we're going to have a Q&A session which will deal with not only the earlier topics, but also valuation in matrimonial matters. A couple of housekeeping points at the start. The webinar is being recorded and will be available if anyone wants a copy afterwards. Secondly, as I say, we have got a Q&A session at the end, so do feel to put any questions in the Q&A box, and we'll try and come to those when we get to that part of the session. If we don't manage to answer any of those questions, then we'll send a personal response after. So, without further ado, I shall hand over to Chris and Gina to talk about investigation techniques.
Great, thanks, Gavin. And as Gavin said, apologies for everyone. My voice is slightly husky from probably the excesses of the new year, so a nasty January bug. But I'll do my best, and hopefully you can hear me fairly well. As Gavin said, looking forward to a fairly rapid session on investigations. It's an immense topic, as I'm sure many of you are aware. I've been involved in sort of investigating corporate matters over the last 30 years in a number of locations. Interestingly, and today we're covering, obviously a bit more of investigations in the matrimonial space, where I'm working with Kate and her amazing team at Quantuma. We're seeing more and more opportunities to really basically implement some of our investigation strategies in helping you as lawyers, advising your clients on, I suppose, one would call dispersal or disposal, or in some cases sort of the evasion of detection of significant assets. And those assets can be spread all around the world. They can be in various forms. Rob is going to touch on crypto, which is obviously massively hot topic, and we're working very closely together. Gina will help me towards the end of my session take you through and show you a tool which we're using called Videris, which is an open source intelligence investigation tool. Before that, I'll just make a few comments. So next slide, thanks. A typical investigation scene. I'll say this primarily just to get, I suppose, one's mind into the thick of things. On the basis you've all been busy doing other things today, I'm sure. What it means to me when you think of an investigation is, I've written down a few things in my mind. There's always a degree of chaos in my experience. Something's happened which requires attention. There are always a significant number of parties involved. In your cases, maybe less than some of the other cases I've been involved with. Those parties will have agendas. And of course, in a matrimonial case, you've got a variety of agendas that need to be dealt with. Timelines can be challenging. You get the hobbyist investigators who like getting involved and applying their trade. Decisions need to be made, but can sometimes be very difficult to make and to keep everyone happy. And lastly, and probably the most relevant for my this talk is the concept of sort of information deluge on every investigation that I've been involved with, both relatively small and very large. We are now having to deal with vast quantities of quite complicated information of varying sorts, and that's really what we're going to talk about a bit further this afternoon. Next slide would be great, thanks. I mean, I thought, I suppose, post office, given everyone's been, I assume, aware of what's been going on and watching the very good documentary. If you were to think of a complicated investigation, where you just sit back and think about what one needs to do, there's probably no better example. But the other examples I put here are cases that I'm aware of and have been involved with. I suppose my point is they are all very, very different, and they require different skills. And in the matrimonial sort of high net worth investigations that I've been involved with, the same rules apply. One really does need to think very, very carefully about the solution to the problem. I suppose the Suez Canal ship, fascinated me in as much that, you had to fix a problem before then, significant investigations into the financial ramifications, vast numbers of people involved, jurisdictions, politics and so forth. So most investigations really do require some quite serious high level thinking. And I think this is very much the case in what we do on these types of asset tracing cases that we're involved with. Next slide, thanks so much. So what does all this mean? They're all different, as I said, but there's a lot of consistent features. And I suppose the point of raising these bullet points is to give you a sense of sometimes this just the stop and think is really fundamentally important in an environment where there is usually some turmoil and, as I said, some raised emotions, particularly in family matters. Obviously, very serious implications as to what can occur and what arises once an investigation is started of any type. Timing is vital, and I mean, a lot of my cases, the timing is urgent, and one has to get into the issues very quickly. But not everybody has the same timing agendas. So coordination and management around timing of matters is vital. Sometimes large numbers of parties, public interest as well. I won't spend too much time, but the last point is important. Normally, when someone's being investigated, someone is being probably alleged to have done something wrong, and therefore people are going to be wanting to attach blame and point fingers. So all of this makes for a kind of a slightly emotional roller coaster ride when it comes to the conduct of what you do. So next slide, thanks. What this means to me, at least, and I think some of my advice to those who are challenged with tracing assets around the world, resolving a complicated crypto case that Rob will talk about, you really do need to have some serious areas and sort of foundations. So I think calm and appropriate is vital. A lot of people ask me what I do, and I say I try and bring calm to sort of complex issues. I would say that expert input is vital, and I would also say early engagement is vital. And we'll touch on that in a moment when Gina talks about open source information. And generally, when I talk about information, you've got to get information. You've got to get the right information as quickly as possible, or your investigation is going to be compromised. Try and remove protagonists, a little bit of what I said earlier. Try and take people out who are in a way, too involved, which again, I know is incredibly difficult in some of the family cases where people are obviously hugely engaged and can be very stressed in regards to the issues that are being looked into. And then I think last and not least is again, this point about best available information. And we'll talk about that in a bit more in a moment. So the next slide, thanks so much. I think for effective investigations, the new world for me was, I suppose, a few years ago. And for those on the call who can remember these days of paper lever arch files and paper bank statements, we'd spend months, if not years, going through vast binfuls of these sort of documents, and it would take forever, and it was a pretty laborious process. I suppose I would say we're now in a hybrid model. We're probably coming out of the hybrid model, and we're really getting into the digital world. But the investigation world now, and I think going forward, and I suppose this is one of my most important points I want to make today, is data is now in such different formats and types that you really, really need to think very carefully about what data you want to collect, how you collect it, and then what you do with it. So whether it's structured databases, so obviously a lot of what we do in these sort of cases is bank statement analysis. So now obviously there are some excellent tools to help on taking banking data, analyzing it electronically, formatting it electronically, attaching transaction analysis to email analysis and to chat. Now, of course, I know in many cases in the family courts, the level of information that's required is closely controlled, and obviously on the bigger cases, that some of the ones I mentioned, you can get terabytes of data of all varying types. The point I want to make on OSINT is where we're moving to next. So open source intelligence is now on a global basis, and this is what Videris is all about, and what Gina's going to take you through now. What we're really saying is the world has data lakes of such immense size, and people have this incredible ability to leave their footprint in open source intelligence data, which is extremely helpful when it comes to the investigations in many different ways. But in the global asset tracing world, being able to investigate very, very quickly and very effectively open source information is absolutely vital. On that note, I will hand over to Gina.
Hi everyone, I'm Gina. I'm a director in the Disputes, Investigations and Valuations team in London, and I'm going to give you a brief introduction to Videris, which is a new investigations platform that I've been working with for about 6 months. It has radically changed the way that I would approach investigations, and by that I mean both pure investigation assignments, but also the way that I might approach some initial due diligence in, for example, reviewing a Form E. So the Videris platform integrates within it all the sources that I may have previously accessed in conducting open source research. Officially, the Videris focuses on 3 key open source intelligence pillars, which are corporate information, social media, and general web content, which would primarily include things like news, but also maybe a casual mention of an otherwise secret estate in a gardening blog, for example. And using those 3 key pillars, we can then build up a fairly good picture, hopefully, depending on what's available out there, on an individual and potentially on their assets as well. So if we move on to the next slide, what makes Videris unique? As I have previously mentioned, any and all of the sources that I will ultimately use in reporting back my findings can be accessed and summarized through the platform. I can also import my own documents into the platform, for example, a Form E, which I can then combine with open source research in the report that I produce. And most importantly, and I will give you some examples of this later on, using this tool significantly speeds up the investigation process. If we move on to the next slide, this is a sort of typical Videris investigation lifecycle. So I'll show you some more images from the platform itself later on. But you can see here that I would start off by importing information that I already know, such as an individual's name, maybe an email address, maybe a country or a town that I know that individual might have interest in. And then using the inbuilt functionalities of the platform, I can then expand that to find their corporate interests, both in the UK and abroad. Social media posts, such as tweets, maybe even LinkedIn contacts or people that have endorsed them on LinkedIn, which can sometimes be incredibly helpful. And I can also use the web search function to identify potential risks associated with the individual, or to find connections that I hadn't previously known about. I can also finally export a report from the system, or I can incorporate my findings into my own report. If we move on to the next slide, this is a summary of the tools and the sources which are currently integrated with the platform. So you can see on the left there, we have the search engines. Now, when I'm searching in Videris, I can simultaneously search across all of these key search engines, which include the largest search engines in Russia and China, being Yandex and Baidu. Vidaris covers 99% of the surface web and also the dark web, as you can see there. The results that the searchers produce are automatically deduplicated and then organized by category, which means that I can filter and refine to find the information that's most important and relevant to me. We also have key social media news websites, which are also incorporated into the platform, and corporate data, which I will address on the next slide. And if we could please have the next slide. So integrated into the Vidaris platform, we have the most comprehensive corporate database currently available on the market. That's Moody's Orbis, and as you can see there, they have a coverage of over 435 million global companies across all of those continents. Obviously, that coverage is not complete because there are jurisdictions for which it's incredibly difficult and costly to find corporate information. But in terms of sort of corporate data that can be accessed, most of that will be within the Orbis database. If we move on to the next slide, you can see what Moody's Orbis specializes in, and that's corporate structure details, beneficial ownership and control, and various metrics regarding the financials of the companies, which is obviously incredibly useful if we want to find out what an individual's assets may be like abroad, but also within the UK. So I'd like to give you all an example of something that I find Vidaris to be incredibly helpful for. So say that I have been instructed to find the current corporate interests of an individual. And I'm going to use Richard Branson as an example here, because usually if we had such an instruction, it would come in the context of a potentially quite complicated structure. So how would I have previously done that? Obviously, I would start by reviewing all the information that's disclosed. But for example, say we don't have any disclosure and I'm starting from the beginning. Well, I would start with Companies House in the UK, and I can very easily pull out all the companies in which Mr. Branson has a directorship. But as you know, shareholder information is a bit more onerous to find. So then I have to start clicking into each company that he is associated with, ensure that it's not dissolved, find its latest confirmation statement with updates, and even sometimes have to add up all the shares manually to establish what percentage shareholding he actually has. Now, if the shares are held by another company, I then have to repeat the process with that company and any other companies that pop up until I've exhausted all the leads that that process brings up. I would also potentially go through accounts and search online to try and find maybe some overseas subsidiaries or interests. And then I would have to deal with the specific challenges of obtaining ownership and directorship information for those entities separately. Now, I think we can all agree that that would all be extremely time consuming. So if we just go over to the next slide, I'd like to show you what I can do with Vidaris. Apologies, actually, next slide after that. Here we go. Right. So as you can see, I can input his name into Vidaris, and then with a few clicks, I have a structure right here. What we have here is a very beautiful graphic. I've actually zoomed it out. So you can't actually see what the information that has come up is showing. So if we go to the next slide, here we have a slightly zoomed in view. Much as that's quite overwhelming to look at, you can see that the lines are showing previous directorships, minority shareholdings, previous shareholdings, and beneficial ownership. Now I can take all of that information and import it into Vidaris's grid view. And if we go to the next slide, you can see that that information has been summarized very neatly and quickly into something that I can then further export into Excel and share with the people instructing me. That whole process can take 20 minutes versus the process I described previously, which might have taken me several hours or even days. And actually, if we just go 2 slides back, I apologize, I skipped out on, and again, there we go. This is another graphic of how the Vidaris interface might look. And you can see here, we've got an individual in the center, and say we've put in their mobile phone number, because that can sometimes be associated with online accounts. And quickly, and on one page, I can pull out all of their corporate information, so shareholdings that they might have, tweets, and also I can import their crypto holdings into the graphic and also demonstrate them alongside the other information. So if we now go 3 slides forward, and one more, perfect. So just to summarize, the benefits of automated open source investigation are, firstly, that hopefully, as I've shown you, it can really speed up an investigation in a really significant way. Accuracy, obviously, because we're not manually importing this information, and there is much less likelihood of some sort of transposition error. Security is something we actually don't have time to go into today, but as anyone who is unwittingly featured as a suggested Facebook friend may know, it's very important. And finally, transparency. Any report that we produce will automatically be fully referenced to all sources used and all the times and dates at which we access them, which can be incredibly helpful if our investigations are being used in court proceedings. And if I've got time, I just wanted to quickly bring up an example of how Vidaris helped me to quickly uncover something recently. I was asked to look into a purportedly insolvent company director who had been spotted flashing his cash, despite the fact that he apparently didn't have any. So using Vidaris, I mapped out all of his corporate interests, and all of those companies were dissolved or in the process of dissolution. However, I noticed that his son had been a former director of one of his dissolved companies. So just out of interest, I thought I would have a look at what the son's corporate interests looked like. When I looked into them, I noticed that he had recently incorporated a series of companies which coincidentally mirrored his father's former business empire. And all of this was done in the Vidaris interface just by clicking within the space of 20 minutes. I was then able to establish that the subject may have cut off his creditors and transferred the assets and clients of his business into these new ventures. As I said, overall, that took me under half an hour, and it makes me wonder how long it would have taken me to find that information otherwise. And on that note, I'm going to hand over to Chris to conclude. Thanks, everyone.
Gina, thanks. That's great. I suppose we're making one mistake here, as much as we're making it sound like investigations now are take about half an hour. With Gina, they can. But thanks for that. As I said, just summary. I mean, we're running out of time on this section, but it's very powerful. I think any lawyer managing now, these sorts of matters, you've obviously, I think, got to have every available tool at your fingertips, and it's great for us to be able to have the opportunity to share this with you. It's not the answer. This doesn't solve all investigations overnight, but it really helps in that kind of early case assessment of understanding what is there, what isn't there. It's very powerful in helping get additional disclosure from other sides, other parties, because you start being able to exert pressure. It's highly cost efficient, and it really helps in the strategy of how you want to proceed moving forward. So without further ado, I will wrap up there. I'm now handing over to Rob, who is recently joined working with us at Quantuma to do crypto asset investigations. And again, this, I know, is a hot topic, particularly in large scale matrimonial asset tracing cases. So over to you, Rob.
Thanks, Chris. Yeah, sure. To the next slide, please. Thank you very much. So my name's Rob. I've been brought into Consumer to look at the crypto side of things, which has become more and more prevalent. My sort of day job is looking at crypto frauds and hacks and assisting victims of such to, one, confirm fraud or theft has taken place. And then the biggest side of it is follow the funds. Where did the money go? And we're seeing more and more in the sort of matrimonial side of things of assets being displaced and dispersed using cryptocurrency, converted from cash to crypto or vice versa, the other way around. And then I'm just going to give you a brief overview of what I need as an investigator to then assist when you're looking for your cases, if you do identify any of these sort of start points, to then great sort of to help me out with the beginning of the investigation and what can I get from those start points potentially. So crypto wallet, in very basic terms, is effectively a private key, your password, and then the public key is what you see on the blockchain. If you lose your key, you've lost your crypto. The saying goes, no, not your keys, not your crypto. There is no way of getting it back. And currently there's over, I think, 20,000 different types of crypto coins out there. A lot of them are just garbage, but a lot of them are increasing in value and their worth. Next slide, please. So the beauty of crypto is the blockchain, which looks very complex there. But what it is an open source ledger. Imagine Ebenezer Scrooge with a big long script where every single transaction that's taking place is being logged down. Now with crypto, the addresses, the public addresses are anonymized, so we don't know as an investigator who is behind that address. What we can see is every single activity, both in the past and then as it happens in the present. Now, what you'll get with the transactions is the who the sent and receive, and also the amount. So I can take a look at a crypto address and see all of its history of all the transactions, and also now this is an open source blockchain explorer from blockchain.com. There's many like them. We use a tool from Crystal Blockchain, which helps visualize the blockchain and helps the investigations hugely in terms of following the assets, but also gives us we call attribution of the address. So gives the background of what that address has been up to in the past. Is it involved with any sort of criminality? And also in terms of the volume, how much has been through it and that sort of stuff. So next slide, please. So this is just two examples of crypto wallets you can set up on your phone right now within seconds, minutes. You can set up a crypto wallet and away you go. Now, what you then need though is you need to have some crypto. Now, to buy the crypto, you can either mine it yourself, which is incredibly difficult and expensive, or you can use like the crypto exchanges to convert cash to crypto, and also vice versa. That's what we call the on-ramp, which is where you convert them to cash to the crypto, or the off-ramp, which is more prevalent in terms of the investigation side of things, as I'll go on to shortly, where they're cashing out, they're converting that cryptocurrency into cash via a crypto exchange, such as Binance, HTX, etc. But these crypto wallets are incredibly easy to set up. You can set up with applications on the App Store, etc., on websites, or go via a crypto exchange. You can then link a bank account to either on-ramp or off-ramp. Next slide, please. It's another example of on-ramping or off-ramping. This is a crypto ATM. This is a crypto cash point. And this is one I've used there where I've put 50 euros into that ATM. And then that is sent crypto to my crypto wallet that I've set up online. And that transaction on the right is shown there. 50 euros get you a very small amount of Bitcoin, especially at the exchange rates that those ATMs provide. But this is another way of on-ramping and off-ramping. Next slide, please. And this is me then sending the transaction onto another crypto wallet. It just looks completely anonymous. We don't know who's behind those transactions. We can see the transactions, but we don't know who they are. Next slide, please. Now, as I conduct the follow along the blockchain, what I'm looking for is an off-ramp. Now, ideally, the off-ramp isn't something like this, a Russian crypto exchange, whereby if you were to go through the court process and request KYC disclosure, freezing, etc., to find out, de-anonymize where the funds have gone and who's behind that wallet. If anything like this pops up, then I'm afraid it's a dead end. But this is incredibly rare. But there are, in effect, illegal crypto exchanges out there, and they are used heavily by fraudsters and hackers, etc. But most of the time, it's the the well-known crypto exchanges are used, which then we can then go through the court process to unmask who those individuals are, who last received those funds that have been dispersed, and conducts further analysis for asset identification and hopeful asset recovery. Next slide, please. This example of just one of probably thousands of fake trading platforms are out there that I see regularly, and often these types of platforms will entice victims to part with life savings, etc., and then make millions and millions of dollars in crypto from such fraud. And my job most of the time is to identify these types of platforms, assist the victims by tracing where their funds went to, where they really went to. They weren't invested on these type of things. Is then follow the funds along the blockchain to then identify the wallets of interest to show the legal team where through best balance of probability where the funds were last seen, and we need to unmask who these people are who have in effect received stolen funds. Next slide, please. Now, the start points that I need in order to start beginning an investigation is just two examples. I need the crypto address or the transaction ID. So the crypto wallet address is the first one, the top one there, big long alphanumeric string, and the transaction ID is unique to that individual transaction. So if I sent Chris 1 Bitcoin, that transaction ID would be completely unique, it would never appear again. And it would show my address, Chris's address, and how much crypto I sent him, and the date and time. That then can give me the start point to then stick into the Crystal blockchain software and start analyzing, okay, where did those funds go, but also more background of that wallet address. What has it been up to in the past, etc. Next slide, please. Now, endpoints, the off-ramps, the crypto exchanges I'm looking for, like I say, the Binance, etc., is then I'm steering the legal team to say, okay, this wallet address here, we don't know who it is. We need help, assistance from these crypto exchanges to unmask and give us more detail behind what's going on behind the scenes and where the funds have been dispersed to. Have they then been cashed out, or have they been converted to another crypto coin to be further laundered? One of those two things usually happens. Now, cashed out, there'll be a bank account associated. Again, further, without those disclosure orders, we're not going to know that from the blockchain. So we need the assistance from the crypto exchanges on this side of things. Next slide, please. This is a typical follow from left to right. So left to right, the victim paying into a wallet and then being moved along the blockchain and then off-ramping to the right-hand side. This is a very basic version of how the fraudsters have moved the crypto. That can be a lot more complex and a lot more difficult, and sometimes it can be too heavily mixed in order to then identify where the funds have actually gone. More often, I think, especially in sort of matrimonial cases, it will probably be a lot more simpler than this. It should be a simple transaction across 1 or 2 hops, where they've then moved funds to another wallet address, and maybe with someone else, a friend or something like that, who are then off-ramping or storing for them away from their own wallet, etc. As a way of them trying to disperse and hide. Next slide, please. This is one example of an open source crypto mixer, which is all out there. This is on the surface web. You don't have to, I would advise and avoid going on that site. It's an illegal site, but simply you put in the address where you want to send your funds to, and it will mix it heavily and make it difficult for someone like maybe not impossible to identify where the funds have gone. Next slide, please. So this is just on the blockchain, just to further clarify, this addresses of interest where followed funds to is then, as you can see, sending funds to crypto exchange, and the one in here is Binance, and it's sending $24,941 worth of crypto to the Binance exchange. What happens next is unknown. We need to go to Binance, like if you're a court order, and say, this wallet address has been received in effect stolen funds. What happened next? And that will give us a spreadsheet of a very detailed breakdown of what has happened within that life history of that account, and in effect what happened after those funds were received into Binance, where they cashed out or swapped for another crypto coin to further launder. Next slide, please. Thank you. Now I'll hand over to Daniel.
Brilliant. So now Daniel is going to change the topic slightly with a brief update on CGT matters. As I've said before, there's going to be Q&A after this. So if you've got any questions on what Chris, Gina, and Rob have said, then do put that in the Q&A box on your Zoom.
Great, thanks, Gavin. Well, yeah, as Gavin said, a bit of a change of direction. Now, it wouldn't be a tax presentation without starting with the caveats. So I'm trying to focus on a couple of core issues that people are interested in at the moment. It's quite simplified examples, and I'm sure that you can spot many simplifications in there. But if people have more detailed questions about these areas I'm discussing, I'll be delighted to answer afterwards. Just in particular, I want to flag this is very much UK tax focused, and most of what I say would not be accurate for parties with non-UK assets or non-UK residents. So with the caveats out of the way, I'm sure everyone's aware of the key change that was effective last April. It was trailed quite some time in advance before it was finally legislated. And essentially the effect was to make sure that any transfer between the parties as part of a divorce settlement was undertaken on a no gain, no loss basis without any real limit on time. Previously, as I'm sure everyone's aware, there was only the year of separation available to transfer without tax arising, which in practice didn't really work for divorce settlements. It's worth recapping the mechanism for this. The key point is that it's not a tax exemption, so it's not a nil rate on a gain that is taxable. Instead, the way it works is that the transfer between the parties is still deemed to be taxable, but the proceeds are deemed to arise at a level, which means there is no gain or loss. So in practice, people are normally treated as disposing of an asset for the same amount that it costs them, meaning that no tax arises. Now, that might feel like an academic distinction, but it is important because the deemed proceeds become the base costs in the hands of the recipient. What that means is, in theory, they could receive an asset, sell it a few days later, and then have a large tax bill if the original base cost of the asset when it was acquired by the other party was a lot lower than the current market value. I don't think it's clear that everyone expects that treatment, so it can come as a shock. So let's think about that in practice. The key thing is it really a simplification? Does it reduce the need to think about the tax that could arise on the assets? Well, the short answer really is not really. Unless the assets will never be sold, then actually we still need to understand what the possible tax on a disposal is. It perhaps makes it harder to work out what a fair division of the assets might be. For example, is it preferable to receive a house worth £1 million, which the recipient would never intend to sell, but if they did, there would be £200,000 of tax? Or is it better to receive a share portfolio they intend to sell next month with tax of £50,000? You know, formally speaking, the house has got a post-tax value of 800,000. The share portfolio has got 950,000. But I don't think it's at all clear which of those situations is preferable without having certainty about the intentions of the parties. So arguably, it does actually introduce a new complexity into deciding what a fair division is. And I don't think so far we've seen any real clarity on how that's going to play out and how it's going to affect discussions and negotiations and mediations. But in summary, it is still important to understand what the tax would be on selling any asset, because it just still plays into the overall situation. This raises another question as well. Previously, you could be fairly indifferent about which assets would be sold to third parties, maybe say to raise liquidity to repay a mortgage or whatever, and which were transferred between the parties because the tax would be the same either way. But now the way in which different assets are treated makes a difference to the cash tax that arises immediately. So that has to be thought about in terms of what is transferred between the parties and what is transferred to the outside world, in inverted commas. It may be that it makes sense to minimise tax arising now when cash could be scarce. So I think in summary, these new measures are good in the sense that they reduce tax costs at a time where there may not be money to pay it, and perhaps where it doesn't feel very fair for tax to arise. But actually, in terms of deciding what to do and understanding the options in the situation, it's made things more complicated. The second issue that we're seeing where maybe the rules aren't intuitive is that it only applies to transfers between the parties, not legal entities. You know, in simple terms, it's a tax relief for transfers between people who have been married, not between companies which they are not married to. So generally, if there's a family company, that's a typical situation, which owns most of the assets of the marriage, then there's tended to be a bit of an assumption that maybe the new rules will have meant it will be easier to get that cash out of the company without incurring any tax. That is generally not true. So overall, it does mean that the benefit of the rules may be less significant than expected. So let's think about that in a bit more detail with some definite examples. So you'll be glad to see that it's a slightly less terrifying diagram, although less informative than some of the others we've discussed earlier. We've got a classic situation where husband and wife have equal shares in a family company. The company owns a couple of £1 million of cash, a couple of £1 million of property. Now, one thing the new rules do allow us to do is now transfer the shares from husband to wife or wife to husband without any tax arising. That wasn't always possible previously. There could be a holdover relief claim if it was a trading company, but an investment company like this, it wouldn't be possible. However, the moment we want to get at the assets inside the company, we still have tax arising. So there's 5 different ways of dealing with this. I'm going to go through very quickly. The first and obvious one is a dividend. So we've agreed that the wife wants to hold on to the property portfolio. The husband is happy to take the cash. They're equal value. That's good as a starting point. So the company could simply pay a dividend to the husband. He has £2 million of cash, and probably following that, he might have his shares written down or given away or whatever. The issue there is that that's an income tax charge, which could be up to 39.35%. So clearly, there's a huge amount of tax friction for that fairly simple transaction. So what about maybe we say, let's not pay a cash dividend, that's obviously expensive. Maybe we can transfer the property to the wife instead. So an asset distribution. Well, actually, that is worse because that is still taxed as a dividend, subject to income tax for the wife. But in addition, the company will be paying corporation tax on any gains it makes on a market value disposal of the property. So that's on that's 25% of any gains. So really not very tax efficient at all. So assuming the easy approaches don't work, what about the slightly more difficult approach? This is one we're often asked about, which is a company purchase of own shares. Now, there's quite a lot of challenges around this, but in this case, the company has cash, so in theory, it looks possible. So in this case, simply the company buys the husband's shares, husband receives the £2 million, and the wife now has 100% ownership of the company because the husband's shares have been cancelled. Now, this is potentially good. The husband may benefit from CGT treatment, which means he'll be paying as little as 10% being BADR or as much as 20% if there is no BADR available. However, there are some very strict conditions for this, which include being a trading company, having owned the shares for 5 years, having the cash to make the purchase. For example, in this case, probably as a property ownership company, it would not actually benefit from this treatment. If that's the case, the payment would once again be treated as a dividend, and we're back to paying 39% tax, so it's not great. So then we get into a slightly more complicated way of solving it. This one is really worth flagging because in general, there's a good chance a company purchase of own shares will not work. In most cases where that is not possible, for tax reasons, this approach does achieve capital treatment. Now, in this one, the wife would put in place a new holding company to own the family company. This would be done by a share-for-share exchange. So we can see the husband still has his shares in family co. The wife now has shares at holding co level. The good piece about this is that it's possible for family co to pay dividends to its holding company without any tax arising. There's no corporation tax on payments of dividends up through the structure. So the £2 million of cash can get to buyout company. That enables us to undertake this step where husband sells his family co shares to buyout company, and the money which has been paid up to buyout company is used to pay for his shares. So no tax has arisen on the intermediate stages. In general, provided he's being paid market value, then the husband will be subject to CGT only, and there are very few qualifying conditions. So that's often the solution. One final possibility, it may be that both parties are actually happy to carry on owning companies. So the wife having a property company, the husband having a company which has cash or other investments in it. In that situation, and I won't go through the steps of these because there are lots, an option is a capital reduction demerger typically. This is a transaction which goes through a number of steps and on a simplified basis ends up with each party with their own company with the assets still in it for them to deal with as they want in future. It can be done on a totally tax neutral basis. There's no stamp duty, no corporation tax, no capital gains tax, all subject to clearance from HMRC. So it's a fairly safe piece of planning and well worth considering if there's no other way to separate the assets without triggering a tax charge. So that's just a quick run through of those. Obviously very high detail, but as I said, I'd be delighted to answer questions. And on that theme, I'll hand back now to Gavin to take on to our Q&A.
Thanks very much, Daniel. Just to reiterate, if you want to put any questions in the Q&A box, they are anonymous, so it won't be obvious who's asking what. We've obviously spoken about tax and investigations, but we've also got Kate Hart on the panel. Kate, I thought we could start with you just by asking whether you wanted to mention any trends that you've seen on the business valuation side over the last year or so.
Yeah, thanks, Gavin. I won't talk for too long because I think what's gone before might be more exciting. But just to raise a couple of points, I suppose, we're probably seeing more valuations for larger groups of companies and companies with more complex shareholding structures. And that's something that's sort of increased, I'd say, over the last year or two. I think the shareholding structure piece comes particularly where individuals might, for example, have sold a majority of their shares in the business that they've built up to a private equity house. PE houses were very active post-COVID for the first couple of years. And often what happens as a result of that is that you end up with shareholding structures where the rights attributable to the shares might not be straightforward. And there are often preferential returns that can be paid to some shareholders. So it's often complex to work out exactly what's owned. I think the other thing that I would just mention that came up towards the end of last year in particular was a sort of resurgence of interest in looking at retrospective valuations, and we seem to have had a lot of instructions on those. I don't know if it's coincidental, but there was a matter of GANEL that many of the people on the call might have heard, where in first instance, Mr. Justice Peel was very keen on looking at a valuation put forward by a shadow expert that considered hindsight and actually took into account the trading performance of the business after the valuation date. The single joint expert hadn't done that. And that left us as experts in a slightly difficult position trying to work out how we should approach these instructions. At the time, I was asked to value a business back in 2008. And I had to do two valuations, one considering hindsight and one ignoring it. But when you're looking at 2008, there's 15 years worth of hindsight to consider. So there are a lot of different answers you could get depending on the approach. Anyway, the final hearing at that, Stephen Trowell KC sat as a Deputy High Court judge, and he actually concluded that his start point was going to be valuation ignoring hindsight. So I think really the take-home message on that to anyone on the call is it'd be really helpful if you're instructing an SJE to do a retrospective valuation. We'd like some sort of guidance as how you want us to approach that, because I think a lot of people can have different views. So thank you, Gavin. If we've got more questions, which I've seen, go ahead.
Thanks, Kate. A question which actually, is basically for both Chris and Gina and Rob, is around kind of what's the starting point? What information do you either need to know already about your client or the other side, or what do you need to ask for to get things started? Rob, shall we start with you on the crypto in terms of, what's the bare minimum to start an investigation of this nature?
Certainly. So start points I sort of mentioned, the crypto address or the transaction ID, but also if there's any suspicious payments on a bank statement, for example, either in or out, and it may not be as obvious as you think. It may not say Binance, for example, in the bank statement. They often use third-party transfer services to be that on-ramp or off-ramp. So if you do go through statements, etc., and you think, well, what is this? Maybe have a quick Google. If you're not quite sure, reach out, ask us, maybe something I already know. But quite often not, it'll be something like Revolut, MoonPay, Transact, or something like that. Is their method how the subject is moving money to crypto and vice versa. Also from any digital forensics, etc., we can take a look at that as well. There'll be laptops, mobile phones. There may be evidence within there that will give us the wallet addresses, etc., that I need. Those essential start points for me to start the investigation.
Thank you, Rob. One of Chris or Gina, will you pick that up from an investigations point?
I'll have a go. I mean, obviously, depending on the type of investigation, as I said earlier, information is just critical. So, for the purposes of using Vidaris open source, then obviously name, company name, address, really anything, all helps. But obviously, the beauty of using open source is, and a tool like Vidaris, it will connect you to anything in the public domain. I mean, more broadly, I mean, we spend most of the time looking at financial statements, as you do, Gavin, and some of the other members of the team, financial bank statements, portfolio statements, etc. Our big challenge is always offshore. In every case I'm doing at the moment, I'm struggling in the Isle of Man, I'm struggling in Dubai, I'm struggling in Ras Al Khaimah, and at the moment, there's a lot going through sort of Singapore, India, and the Middle East. That's a hot topic. But a slight sale is that we've got a very good team in Dubai and very good teams in the Caribbean, and they're using exactly the same tools we're using, which actually really helps us coordinate on a global basis. Thanks.
Thanks, Chris. We've got a question probably for Gina specifically on Vidaris around whether, can you actually set up alerts so that new information's captured and you're told about it like you can with a Google alert, or is it kind of a one point in time get that info?
You definitely can do that. I don't quite know how, but I remember being told that that is something you can do, which can obviously be very helpful in a live investigation.
Thanks, Gina. One final investigation question that's come through. Is it possible to get access to things like people's bank statements, etc., or is that a total no?
I mean, with consent, you know, obviously, yes. There are some very interesting technology tools out there, which some people like, some people don't like, which is if you get an email address, you can ping banks all around the world and you will get details of bank accounts linked to email addresses. We've used it, I've seen it, it's not cheap, but it is a particular tool that is available on the market. So, you know, again, on Cape, we're talking there several £1,000s per search. So it's not, it's something you've got to consider carefully.
And actually tying in with that, Chris, we've had a few questions about, you know, what's the kind of minimum cost that we can prepare a report using Vidaris for? You know, is there a minimum cost for clients?
I suppose I'll just answer that by saying each case on each case merits. We obviously want to work with clients, and we're super keen on providing such an efficient and fast service. We would normally just charge our hours in agreement with the client, and I would think, you know, on what Gina's explained, what I've seen, we can comfortably provide value in a few hours work. So you're looking in the region of, you know, £500 to £1,000 to do an initial assessment of a relatively straightforward individual and associate companies. Obviously, it all then depends on additional time. But we would obviously agree right up front with clients as to what we think is a sensible price point, given we're saving, hopefully, vast numbers of hours of people going through Google, Companies House, and so on. My voice is going.
Thanks, Chris. We shall spare your voice. Although I think it's worth saying that, you know, in terms of any of the areas of work that we do, we're always very happy to have a preliminary chat and explain the ways we might be able to help. You know, we certainly don't stop the clock running straight away. Kate, you talked about hindsight and valuations, but a slightly different topic around timing. What's your view on the need to update valuations where there's quite a long time delay between preparing a report and the hearing date?
I think whether or not it's worth updating a valuation really does depend a bit on that amount of time, as you say, Gavin, and also on whether anything really has changed. So if you look at, for example, a property investment business, if nothing much has changed in the property marketplace, is question whether it's really worth it. If you look at a trading business, particularly something that's growing rapidly or where there might have been some new innovation, then it would be something worth looking at. I think there isn't really a one-size-fits-all answer, but I think it's worth being aware that from a cost perspective, it's usually at least half or sometimes slightly more of the cost of the original valuation to do an update. So it's not just a matter of plug in some new numbers and it all runs through. We need to really understand the business.
So it probably makes sense for the parties to ask the single joint expert what their view is and how lengthy and difficult a task it will be.
Yeah.
Brilliant. And finally, a question for Daniel on a slightly different tax topic. If a company owned by one of the parties is subject to ongoing HMRC tax inquiries, how should that be factored into the matrimonial issues that arise from that, i.e. there's obviously quite a lot of uncertainty if there's an inquiry that's ongoing?
Yeah, I mean, I think the short answer is very carefully, but we've seen a variety of things in recent years. Obviously, HMRC inquiries can run for quite a few years, can be at very different stages. So I've been instructed on matters where there's awareness that one of the parties has entered into tax avoidance, which is likely to be challenged, but that's all that's known. Others where disputes have been running for many years and are close to settlement. I think in all cases, really, the key is just to try and work together to have clear instructions to how we're trying to evaluate any exposure. We can advise on our view of the likelihood of settlement, the dynamics, the ways HMRC might settle things, and give as much guidance as possible. In general, that's based on what options HMRC have to levy penalties, how other cases have settled, and so forth. But fundamentally, it is an area of uncertainty. The key point is just to make sure that we've got as much information as possible to explain the dynamics, so everyone involved can see the range of possible outcomes and the likelihood.
Brilliant. Thanks, Daniel. And I think that brings us to the end of both our questions and pretty much on time to today's session. Thank you very much to all our speakers, to Chris, Gina, Rob, Daniel, and Kate. Thank you to everyone who has joined us. Firstly, as I said at the beginning, if you or any colleagues would like a copy of the recording, then do let us know. Secondly, if you've got any questions that haven't been answered, then do feel free to email any of us and we will obviously endeavour to give you a response. So thank you very much to everyone and hope to see and work with many of the people on this call soon. Thank you.